Everybody, this is Jim at SP500chart.com. It's a little after 6 o'clock on Sunday evening here on the East Coast on December 30th, 2012. And we're going to take a look at what happened last week in the S&P, what happened last Friday, and what that might mean for the week coming up. This is going to be our weekly review. And before we get into it, I just need to remind you that SP500chart.com and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you should be making investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I always say that. But I also always say that I am just a guy who draws lines on charts. So let's take a look. Okay, we are looking at a daily chart. Each candle is 1 day of trading, and you can see that this goes back roughly 2 years. And the reason I want to show this to you is I want you to see this line right here. I think this could be, since this broke, actually it broke in November, but it looks like this rally that we had off of the mid-November lows may have been something of a back test attempt on this line. And right now it's looking pretty weak. The futures market was down pretty big after hours last Friday, up a little bit on so far today, but you know what I think about Sunday early evening futures. I don't think you can really trust them. So anyway, so this line is broken. This line is actually, most importantly, drawn from the early June 2012 lows and those same mid-November lows. And it just so happens that when we extend this line back, we also touch on the December lows that really were kind of the right shoulder of this inverted head and shoulders pattern that kicked off that rally that took the market over the 1400s. There's that inverted head and shoulders pattern. Here's another little inverted head and shoulders pattern right here. So you can see that this line, we are not at that level yet. But if we do get there and we take it out, I would think that would be a real serious sign of weakness. Now let's look at a 15-minute chart and take a look at what happened last week. Well, to begin with, it was a shortened week with Christmas Eve just trading half a session, and we ended up closing that right at a little bounce on this ascending support line of this channel that is defined between, here I'll go to a 30-minute chart, you'll see a little bit better. Here's our channel that we had been following for a number of weeks. This would be the top resistance line rising, and this would be the rising support line. We closed on Christmas Eve with a little bit of just kind of a little weakness there, but we're still above that line. And I made the comment on Christmas Eve. By the way, before the week before, I thought we were ready to bounce and maybe come on up and retest the 1440s. But when we made that second trip down on Christmas Eve, I just kind of made mention that I didn't think that was a sign of much strength and that we needed to watch this line. Now, interestingly, I had a position in SPY that I took right in this bottom area right here on the tag of this lower line. And when that broke on the 26th, I played it real patiently, to be honest with you. I told myself that I said, just be patient. There will likely be a back test to at least to get close to back testing this low area right here. So since this produced a bounce, then it broke. Once we got up into over the 1420s in the S&P, I got rid of that SPY position, and right now I'm glad I did. And I'm looking for a sign of something a little bit more meaningful, other than just a tag on a channel. But that said, looking at the week, let's do it at a 5-minute chart. We really just established a new descending channel that we got over temporarily on the end of the 27th, but it looks to me like we've got kind of competing resistance lines here. This line is parallel to the lower line for the most part, and I think that is an operative trend line. But we also have this lighter colored line that actually has more touches, and you can see it right here. The touch on the 21st, the touch early on the 26th, later on the 26th, early on the 27th, got over that line on the close of the 27th, gapped under it on the 28th, tried to get over it on the 28th, couldn't do it, made another go. So this line probably deserves to be the darker of these two lines, because I think it's exerting what appears to be more influence. So we're going to do that. The week really, once we broke this line, the week proceeded as one would expect, and as we expected, and that is we broke the uptrend, got a little bit of a sort of a weak back test to this area here, and then it's been selling off ever since. Again, there's been some little momentary rallies that if you're really nimble and you're interested in risking that, that's great. But I'm looking for something with a little bit more staying power personally. So right now, it's looking to me like we should have support. I think we'll find some support possibly at this neckline area, but I'm going to make this a little bit less of a slanted up line, and I'm just going to make it more horizontal. And the reason is because really that's kind of what we saw back here during this 2-week period, where the market could not get above roughly 1387 or so. So I'm going to leave that there, adjusted for that. And if this breaks, then the next area of support I see is this rising line, which would be in the 1360s. And if that breaks, then we got this red line down here in the low to mid 1300s that is upsloping. And that trend line, I would think, would be very important. You can see that the second point of this line is early October of 2011. Then the next line, we have to go all the way back to a 3-day chart, because that is our panic low of March 9th, 2009. So I can just, it looks to me like if this line breaks, then we are probably going to come down and test some lower levels, where the next area of where I would expect support, frankly, would be in the mid 1100s. So guys, if this fiscal cliff thing just keep kicking this can down the road. Oh, and by the way, I want to show you one more thing. Let's just go to a daily chart. Look at this line right here. We had a rally, a higher rally, and now if this line does break, this may act, even though it's not symmetrical, this whole thing here may act as a head and shoulders top. This would be a big left shoulder, the height of the head, and then if we take this out, we would measure this pattern as producing a downside target, depending on where it gets taken out. In the 1200s, under 1250, and I tend to think that if we were to get there, we would probably come on down to the next level of where one would expect some decent support. Because if we get down here, then there just isn't that much that's happened over the past year that I could see that would hold this market up. Okay, so if we get down to 1235, 1240, I just don't see a trend line that would come into play that would turn this thing around. Now, that doesn't mean it won't turn around. That doesn't mean we won't make some pattern here that gives us an indication. But right now, just as we're going forward, I don't really see that at this point in time. But we're not really at that juncture yet. It's just our weekend reviews. Our weekly reviews are usually when I'll look a little bit more at longer range things. For all I know, we may come down to this line, or we may come down to this line, and at either one of these, the market could really bounce and bounce strongly. Well, I think right now this fiscal cliff nonsense is being something of a driving a news event, but I want to remind you, trend lines still tend to work even when news is going on, because the news is rarely strong enough to do things that totally disregard the chart. So right now we have trend lines that I think we can keep an eye on going forward, and I hope you'll stay with me throughout 2013. Let's see what develops. And by the way, we can extend this down here. Who knows? Maybe tomorrow we end up getting down under 1390. Maybe we tag this. Maybe that's a good spot to bite off a chunk. But I'll leave that up to you. Right now, that's just what I see going on as far as trend line analysis goes. So as we head into the end of 2012, I just want to thank everyone for your support. I want to thank you for all the kind words. I'll tell you something. When I started doing this, I really thought this could really open up a can of worms. And because I think we've all known people who do similar things, and they've opened up a can of worms. But I want to say I just really respect the kind of I don't want to say reaction, but the acceptance. I think you guys have really read what I'm trying to do really, really well. I don't know it all. I don't pretend to know it all. And I think and I know I can't always be right too. You know that. I think we've done this in a really mature and in a way that has generated a lot of mutual respect. And I want to just thank you so much for that. And I would love to take that throughout 2013 as well. So look, guys, if I don't get a video to you, well, I will. I'll have one up on New Year's Day. But just in case something happens to my internet connection, I want to just say Happy New Year. Thank you so much. And let's see what 2013 brings us. 13, that's kind of, if you're into numerology, you might be scared about that. Wink, wink, nod, nod. I'm not. We'll just keep looking at it in a rational and in as objective manner as possible. And I hope you'll be there with me to do that. Thanks again.